UnitedHealth stock investors are experiencing a challenging year as the share price is down over 53% year to date in 2025. Of course, the biggest drawdown came in May when the company revised its expectations for 2025 downward. And now investors want to know what's the latest, what's going on with UnitedHealth stock. I'm going to answer a lot of those questions here in this video by going through the details of the latest developments and what it could mean for UnitedHealth stock investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So UnitedHealth's management team saying that as we continue to assess the state of our business, it is very apparent that some require fundamental reorientation. Others require building and nurturing, and others must be reconsidered and redirected to original purpose. And the takeaway from this is that it's not a quick fix. It's not something that was caused by macroeconomic conditions. Sometimes a business, a stock goes down because the economy is performing poorly, and just being one of the bigger companies in an economy that's performing poorly or in a segment that's performing poorly, your stock price goes down as a result. This isn't what's happening with United Health. There is a big structural execution that happened at the company, that is happening at the company, that needs to be assessed, addressed, and it looks like there's need to be a big restructuring of the value chains of the company. And that's a bigger lift. That's a more challenging situation than if it's just part of, let's say, a cyclical decline in an industry, or when a business is going through a recession and consumer spending is falling. It's just a matter of time until consumer spending recovers and the economy recovers as a result of offsetting actions that the government and central bankers take in response to a recession, which then lifts all boats higher. This isn't that situation. This is a much more challenging situation for UnitedHealth stock investors. So we are on this course against a challenging environment, which includes the generational pullback in Medicare funding set in motion in 2023 and playing out through 2026. So on top of the executional challenges the company faces, there are industry challenges that's also impacting its business. Of course, the United States government is working to change its healthcare system, and especially and most notably in the most recent legislation, the Big Beautiful Bill, there was something in there that's going to create, in the estimates of the Congressional Budget Office, over the next 5 to 10 years, there's going to be an additional 10 million people that will not be covered by Medicaid, the government's Medicare program. So all of that is creating huge industrial changes for the healthcare industry, how people seek out healthcare, who pays for healthcare, where they go for healthcare. All of that is changing dramatically, and it adds on top of the existing challenges the company faces. And they highlight this, that in the United States, there's continuing public controversy over longstanding healthcare sector, right? People are not happy about healthcare in the United States. They're not happy about how much they pay and what they get in return. They're not happy about who's paying for healthcare. They're not happy about the people that are getting healthcare for free. In general, the US public is just not happy with the healthcare system and the healthcare outcomes. And so there's, talk in the government of shifting some of the policies in the healthcare sector, and change is not going to be positive for United Health Group stock investors. The change is not looking like it's going to be beneficial for United Health stock. The management team says that beyond the environmental factors that are affecting the entire sector, and more specifically to us, we made pricing and operational mistakes as well as others. And I think that's a bigger factor. The pricing and operational mistakes are a bigger factor for United Health compared to the environmental factors, those that are outside of its control. By the way, this document I'm reading here is United Health's Q2 2025 earnings call transcript, which was released on July 29th. I've made this available for my channel members. You go to your membership benefits section on my YouTube channel page, and you can access all of the benefits depending on your level of membership at my channel. If you're not a member yet, see the description below. Click that link, and you'll see all the benefits you get as a channel member. We'd love to have you join us. So, over the last 60 days or more, we have made extensive management and operational changes aligned to this agenda of reform and performance. The management team saying that the primary driver of the non-healthcare earnings shortfall for 2025 is that our pricing assumptions were well short of actual medical cost. Our current view for 2025 reflects $6.5 billion more in medical costs than we anticipated in our initial outlook. And management said this also around May when they gave investors their initial downbeat guidance. And because of the inflexibility in the pricing of some of their plans, they weren't able to offset the higher cost with an increase in price. Because of the inflexibility, prices are usually set for the full year, and within the middle of the year, they're unable to change prices to offset the higher medical costs that they're incurring. And so that's leading to a huge shortfall in profitability for the company, unfortunately. Went on to say that we know these are serious challenges and we are humbled by them and will carry that sense of humility more deeply into our culture. But we also believe we can resolve our current issues and recapture our earnings growth potential. That was more of an abstract statement, and I like that they provided more detail and understanding on the reasons why they underperformed or they will underperform in 2025. And then, of course, once you identify the reasons you underperformed, only then can you identify ways to improve. If you don't know why these things happened, then you don't know how to fix it, and or you don't know if the strategies you implement will actually fix these issues. So they go on to say, when we prepared our 2025 Medicare Advantage offerings back in the first half of 2024, we significantly underestimated the accelerating medical trend and did not modify benefits or plan offerings sufficiently to offset the pressures that we are now experiencing. So that's the root of the problems they're having today, is that when they were preparing for their 2025 plans, and this was happening in early 2024, they didn't adjust accordingly to the higher accelerating medical cost. And so that mismatch between their forecast and reality is what's causing this underperformance here in 2025. And some of it has to do with, of course, the unprecedented circumstances of the previous 5 years, right? You had a pandemic, you had lockdowns, you had the COVID-19 vaccines, and the additional thing that was happening during those lockdown stages were that people were not looking for or seeking out the health care they needed. They were delaying some of those visits, those doctor's visits, those preventative visits, and letting maybe things linger longer than they otherwise would have. And now starting to feel the consequences of that as their health diminished. And now they're starting to see like they can't delay these things any longer, and they're having to go back and visit doctors for treatments that they delayed, or just, elective treatments. If you recall reading about in 2020, 2021, there were so many elective treatments that were put off for later dates, and you couldn't even, if you wanted to, get some of those elective treatments because hospitals and doctors were overwhelmed with what they were dealing with at the time, and they weren't dealing with any elective treatments, and they were pushing those out to later dates. So a lot of this has to do with the unprecedented circumstances from the pandemic, adjusting to lower utilization rates in 2020 and 2021, and perhaps even in 2022. And then in 2023, starting to see some of that rebound. And then now heading into 2025, really feeling that full impact of people that were putting off things and now going to doctors and going to hospitals and seeking treatment because their health deteriorated so much during the pandemic.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.